Thanks for being with us, guys. This is DeFi Alpha, project lead over at Umami, and I'm really excited to have this conversation. We are waiting on our friends from GMX to join. Not sure if maybe something came up on their end. We've been excited to chat with them because there's a lot of great stuff going on at GMX. As with Umami. But until we get them to be able to hop on the spaces, let's take a poll, guys. Would you like us just to kind of dive into some Umami related alpha? There's a lot that we can share, a lot that we can update you guys on, and that's a conversation that I would really like to have as well. So can we get some claps if that is a preference for you? Obviously, if our friends at GMX are able to join, we will get right to that. But otherwise, let's see some claps if people want us to get into a little bit of Umami Alpha in the meantime. All right, I see some interest, but I need to see more. You guys need to persuade me. Where's the love? If I see some claps, if I see some hearts from the majority of people listening, that might give us. There we go. Okay, I love it. All right, that's what I need to see. Well, with that, let's get into it. And again, just to set expectations, if our friends at GMX are able to join, we are going to hit pause on the just straightforward Umami Alpha drop and get into more of a dialogue with the GMX guys. But until then, Umami Alpha it is. So let's hit on some highlights. So first of all, I think as many of you guys know, we have been nose to the grindstone building some really exciting new products that are going to be launching very soon. We have completed the protocol logic for the USDC vault, which is the stablecoin vault that yields 30% APR. So those of you who are following us, I think that's been kind of the number one new product launch that people have been most keen to hear updates on. And we have very good news. It's the vault is complete. It is in testing now. We want to make sure that it is absolutely flawless. The vault is going to be included in our security audit with Zokyo, which kicks off on the 25th. And Tracer has dropped some alpha. I see a few of our Tracer friends here now. Tracer has dropped some alpha that their V2 perpetual pool platform is going to launch extremely soon as well, and our vault is built around that. It's designed to take advantage of some of the unique functionalities for V2 perpetual pools. So the stars are aligned to have this vault live. We are aiming for internally, we're aiming for June 3rd as our target for having the vault fully up and running on our front end. That's not sort of a formal target, but since you guys are here, we figured we'd give you a little alpha. We have not announced that beyond this AMA. So that's what we are aiming for right now. The vault is going to have all the functionalities that we've described, and we're extremely excited about it. It will, at this point, if you look at the APR on the two kind of key component parts of the vault, which are the Tracer DAO perpetual pools and the GMX's GLP index asset, both of those are quite high right now. So we're seeing 40% plus APR in GLP. We've seen APR in the past week or so as high as 100% on the 3x levered ETH short position token on Tracer. So we expect this vault to exceed our expectations on APR, possibly quite considerably. And we are working with a really cool group called OT Balance that's building a pretty sophisticated model that will allow us to maintain as close as conceivable to true delta neutral for this vault. And that's going to be coupled with some initial seed liquidity from our treasury to provide kind of an additional buffer. So we're feeling very confident about the ability of this vault to truly be delta neutral and just to be extra certain that there are no risks, either market or otherwise, for vault depositors. Along with having it audited by Zokyo, we are also going to purchase insurance for the vault. Right now, we're looking at Cozy Finance, which has some pretty compelling options, but we're speaking to some other folks as well. So that is sort of a high-level review of the stablecoin vault product. We're feeling really, really positive about it. Other major updates on our end, we have 5 new Autocompounders that are also going to go live in tandem with the vault. And these include some really unique products. They're really not conventional Autocompounders, and we will probably rebrand them to reflect that. There really are yield maximizing vaults for assets like Jones DAO and associated Jones farms, as well as various DOPX farms that harvest rewards from those farms and single-sided stake them. So they generate no sell pressure for these projects. That's why we were whitelisted to build them. And they're going to be the highest yielding available option for getting exposure to DOPX farms, Jones farms, and others. And we're also going to have some more traditional autocompounders for balancer LPs. So all of these assets, all of these products are going to have pretty incredible fee generating potential for Umami, right? And for those of you who are involved in Umami, I think you know the drill. We have a product called Marinate. It's essentially a staking on a monthly epoch, and those people who stake their Umami in that product, they get a cut of our fee revenue, our protocol revenue, in the form of ETH paid out to them regularly. We have a APR right now that's been between 40 and 50% in ETH for staked Umami. And we're very excited about what these product launches are going to do for the APR on Umami, on staked Umami, once they go live. The models that we've built suggest, honestly, millions of dollars in protocol revenue to Umami from, for example, just the stablecoin vault, the 30% plus APR stablecoin vault. That's going to be such an attractive product and should capture so much TVL that based on the fairly modest fees that we're going to charge to depositors, we think that this stream of ETH-denominated income for Umami stakers is going to be pretty mind-blowing, and that's going to be on top of the existing 50% APR that we're already generating. So this is an incredibly exciting time for Umami. Obviously, the market has been pretty rough, and I think everyone's been affected in some way. If you look at tokens that have been sort of least impacted by it, I think Umami is up there. We dropped to maybe $11 from our peak of 16. Far less than a lot of peer projects. And if you look at our chart relative to ETH rather than USD, you'll see that we have just been continuing to gain, significantly relative to ETH. So it's that, relative outperformance compared to ETH that has kind of shielded us from, being hit as hard by the market downturn. So we take that as a very bullish sign, and we think that, we have a natural, I wouldn't even call it a hedge. There's just a natural buoyancy to the Umami token, because if you are generating 50% APR in ETH and you have a pipeline of products that are going to generate significantly more protocol revenue that will be passed on to Umami holders as even more ETH yield, there is really sort of a natural limit on how far the token can fall before it becomes a ridiculous arbitrage relative to that ETH denominated yield. So we think that is really what accounts for our pretty robust trading, and it makes us feel really bullish and really optimistic. So, it's great to see so many people listening to us, and we do think that we are finally, as a project, kind of hitting an inflection point where we're getting kind of the attention, the excitement around what we're building that we've hoped to see. And I know there's a lot of core community members that have been with us for a long time, through some of the rougher days in the market for peer projects like us, and we're finally seeing what we have been building for several months, 3-4 months now, 7 days a week, get close to reaching fruition. So for those of you who just joined, because I'm seeing more people have hopped on, just the key highlights that I really want to drive home are that we have a 30% APR, 30% plus APR vault strategy for USDC. It's a stablecoin vault, delta neutral, some of the highest APR you can find anywhere, that is going to be going live very, very soon. Our internal target, we weren't going to announce this publicly because we don't want to sort of tie ourselves too much to a specific date, but since you guys are here, we will drop some alpha. Our internal target is June 3rd to launch the USDC vault. That vault mints GLP and collects the 40% plus APR on that side and hedges the GLP's market exposure with Tracer DAO's perpetual pool tokens and generates yield denominated in TCR on that side, swaps those various yield tokens it receives for USDC, so that people can withdraw at their leisure with the same total protection of the underlying deposited assets plus 30% plus yield, also denominated in USDC. And we're launching that into a very volatile market, which is frankly perfect for a stablecoin vault. So we're very bullish on the prospects for that product. It's going to be accompanied by a suite of new staking vaults, effectively Autocompounders, but they're pretty unique for DAOX farms, Jones DAO farms. We expect really, really significant TVL from all of these products, particularly the stablecoin vault. And we anticipate a really dramatic increase in ETH-denominated yield for holders of Umami. If you stake Umami in our Marinate product or in our Autocompounder, once these products go live, they're going to be collecting fees on all of that TVL. It's going to be converted to ETH and paid out to you if you're a holder of Umami or a staker. So we couldn't be more excited. We really believe in what we're building. We think that this is going to be, a primary entry point to the Arbitrum network, that we think we're in the right place at the right time, that there's going to be an enormous migration of TVL from mainnet to Arbitrum over the coming months, and that Umami, by building these sort of market risk hedged, yield optimized vaults and Autocompounders focused on capturing the yield and fees generated by Arbitrum's leading projects, that this is going to be a major selling point for Umami, a major selling point for the network, and is really going to help popularize Arbitrum and attract new users. So for those of you who are from the GMX community, I just want to thank you guys. GMX has been an incredible partner for us. And to honor that, we are going to be whitelisting all of you guys for a relatively modest capital raise we'll be doing sometime in June. It'll be about 75,000 max Umami that we'll be issuing via Dutch auction, but we want to privilege the community members of our closest partner projects in this Dutch auction. So we'll be whitelisting GMX as well as some of our other really great partners like Jones, DAOX, our friends at Mythical. There's a long list of really close Arbitrum native project communities that we'll be whitelisting. But just want to let you guys know that you are welcome to participate if it interests you. It'll be probably one of the better opportunities to build a substantial bag of Umami with zero slippage, right? Which is really, we think that the Dutch auction will probably end up pricing quite competitively relative to the market price for Umami, but there will be no slippage and maybe a modest discount just depending on the auction dynamics. So for those of you who are interested, make sure that if you're on our Twitter account, you can click through to our AMA questions and chat. We have a link to that Discord chat right up on our most recent tweet on our Twitter account. And you can just ping Mr. Grumpy Pants. He is our community manager, and he will help set you up with our special private channel for people who are interested in alpha around this OTC raise. Again, we were targeting sometime in June for doing it. And those are kind of our key points. And I should thank Firebrand. You read my mind. The other thing that we really should mention, and that I want to mention before we wrap up my little spiel for the day. Actually, there's two things, and there's one that I haven't shared with you yet, Firebrand. So I'm excited to do that. But we are going to have a new UI, and it's very lovely. It's completely different from the one that we have. We know that our current user interface, it is not the most user friendly. It also just doesn't capture who we are as a project. It doesn't have a sophisticated dashboard. It's a cotton candy pink right now, and that's just it's not the direction that we're going. We have a really beautiful, really polished UI in the works. We're going to launch an early sort of beta version of it. Internal target for that is the 27th of May. And we are working with some really talented professional designers to develop that beta into a fully fleshed out, very professional quality use front end. That will all play out over the ensuing weeks. So anyone who is dealing with kind of, clunky UI or wondering, why there isn't, a more developed dashboard, that is going to change very soon. And there's something really beautiful in store for you guys, with the beta version coming out in just a week and a half, and then a more developed version probably sometime in June. And we are, along with working, as we mentioned earlier, we're working with OT Balance to build a very sophisticated model for a USDC vault, which will generate a ton of awesome dashboard data. We're also working with Multifarm. We announced that in a joint announcement earlier today. They built Olympus DAO's dashboard, and they are helping build ours as well. And that's going to be added to our front end. So expect really rich, detailed, and very user-friendly data and metrics on all of our products very soon. And the last thing, and this is a little reward, I think, for those of you who joined, as many of you guys were here 10 minutes early even for this AMA. So we're going to dump all the alpha for this awesome group that we have. This is a big one. This will take a little bit of explanation, and we will be putting out a formal post on our Medium blog, our blog on Medium, explaining it in more detail. But Umami, I think, as you guys know, we're very, very serious, and we're building something real. I think, some people still associate us with being kind of a, degen, DIY, all anon project on Arbitrum, and those were our roots. But we're going in a much bolder direction than that, and it's really moving fast. So those of you who have been following us, you know that we already have doxed advisors. We have a doxed multi-sig holder, Nick W. We have a doxed legal advisor, Alex Golubitsky, who is now very involved in our team, and we're getting audited by Zokio. So those should be some early indicators that we're going in a pretty bold and serious direction with this project. But we're going to take another big step. We are going to be creating two legal entities for umami.finance, and I'm going to explain how that's going to work briefly, and we're going to have a more detailed announcement on our blog this week. But long story short, Umami is a DAO, and will always be a DAO, and the assets in the treasury and all of its products and all of the governance decisions around Umami will always be made by its DAO community and its multi-sig. That's never going to change. So one legal entity that we're creating to formalize our standing as a DAO is a Cayman Islands-based DAO foundation. This comes with absolutely no restrictions or limitations on us, and this foundation won't be holding any assets. It mainly exists to really just make clear who we are and give us the benefits of having sort of an IRL, if you will, entity, that can represent us and handle, create a fiat bank account, for example. But more than anything, just clarify that Umami is a ownerless, leaderless DAO. And at the same time, we're going to create, and you guys are probably quite familiar with this structure. We actually did file the paperwork today. An LLC based in Delaware called Umami Labs. And Umami Labs is not going to be an owner of Umami DAO. It is not going to have any governance. It's not going to hold any treasury assets. It will be a completely independent entity, but it's going to be able to provide incredible support on the dev side for Umami DAO. And so if you see where I'm going with this, by kind of having that Cayman Islands entity for Umami, very much makes clear that the DAO is the DAO and is a completely independent entity. Umami Labs, the LLC that will be based in the United States, will be strictly a technology company, but it's going to give us unbelievable firepower in terms of being able to hire full-time developers. It's probably going to be headquartered in New York City. That is our plan. We're going to be hiring full-time developers. They're going to be helping build, this very ambitious suite of products that we have on our pipeline. Those of you who follow us closely know that this USDC vault, the 30% plus APR USDC vault that we've been talking about, is just the beginning of our vision for what we want to build on Arbitrum, and we eventually want to have a comprehensive suite of products that allow people to have risk hedged exposure and kind of build their own portfolio for the entire Arbitrum ecosystem. So, we have a really bold vision. We are going to need all hands on deck. We need to be able to source talent, very effectively. And we think that having, options effectively for, those who want to work in sort of a Web3 Anon basis, Umami DAO will exist for them to do that. Those who want to work in a more trad tech environment through Umami Labs, this independent technology company, will also have that option, and it'll be in New York City where there's an incredible amount of dev talent. So if if you're here, you're catching us at the beginning of something really ambitious, and we're building really quickly and scaling really quickly. And this initial vault launch is just going to be a first taste of this overall direction that we're trying to move in. And I think what you're going to see over the next quarter is a dramatic expansion in the speed of product launches, the breadth of products that we're going to offer. And of course, for Umami holders and marinators, the volume of protocol revenue that will be being paid out to stakers of Umami as ETH passive income denominated in ETH. So that's our vision. We're going to have more updates, and I'm sure there are lots of questions around that. But I just want to share with you guys some of the excitement that I have, because I think everyone on the team is really, really excited that we are building something real and serious. So with that, let's open it up to questions. Does anybody have questions that they want to ask us? Oh, here's JD Tiger. Ask away, my friend.
Hey guys, how we doing?
Doing good. How are you?
Good. Super exciting news with the development of the two different entities. I was just hoping that you could speak more on, especially in the United States entity that was created, what are some of the benefits that you guys could end up providing that you think would not only benefit, obviously, Umami holders, but the substantial growth that you guys are trying to get from a DeFi development standpoint?
That's a great question, and thanks for asking that. So, first of all, I guess one thing just to kind of give you guys maybe an analogy to help you understand sort of how we're thinking about this. The structure that we're talking about is really quite common. So, Uniswap, for example, there's an on-chain DAO-like entity, and then there's also it's actually also headquartered in New York, a registered corporate entity called Uniswap Labs, right? Our partner is Tracer. They have Mycelium as their sort of off-chain corporate entity that houses some of their full-time staff and development team, and then Tracer DAO is fully on-chain DAO. So the biggest benefit, if I'm being direct, is that I've learned as an operator in the DeFi space, in Web3, that it's frankly just very hard to source and assess and manage talent in a fully anon environment. It sometimes it works out wonderfully, and obviously, the folks on our team are all Web3 native, and we met them, through through sort of the channels that are available to us on chain. And it's worked out very well. But the key thing that I think I want to drive home to people who are listening is that, we want to we're going to be launching this USDC vault and these Autocompounders, and that is really exciting, and it's going to generate, again, probably expect well over $1 million, 1, 2, maybe 3 million, based on our models of revenue, just from that one product launch, the USDC vault, over the course of a year for Umami holders. But there is so much more to be built, right? And the truth is, I think any project that's operating on Arbitrum right now, including us, we are kind of inheriting an opportunity of a lifetime by virtue of being on this chain at this particular time, because we really are expecting, to continue to see an enormous migration of TVL from Ethereum over here. And we think that, the DeFi ecosystem, which is already taking off, is just going to continue to become even richer. It's far lower gas fees, far faster time to finality than mainnet, but inherits mainnet security. And I think that we're going to see a lot of DeFi functionalities that currently happen on mainnet or on Alt-L1s, many of which have been hit quite hard lately, as you know, migrate to Arbitrum. And I'm giving that spiel as a preface for my broader point with Umami Labs, which is if you want to capture the potential upside as a project of that level of TVL migration, right? There are $300 billion roughly in TVL on mainnet, billions as well on Alt-L1s, and also many new options for on-ramping fiat. We think all that will Arbitrum will be capturing a really sizable chunk of that, and the DeFi ecosystem is going to be exploding. We want to keep up, and we want to be a major project on Arbitrum. We actually want to be kind of the primary gateway for new users onto the network, kind of offering this broad-based exposure to the growth of the network, even before they're fully familiar with all the other incredible projects on Arbitrum. And so if that's our goal, we really need to be able to scale fast, right? And so the truth is, saying all this because if we can also, we're going to be headquartered in New York City. If we can hire talent, through conventional channels, through this Umami Labs entity, which again will be totally independent from Umami DAO, we're going to be so much more competitive. I mean, frankly, there's not going to be any DAO. I can think of some major DAOs like Yearn. And the reality is that if you are entirely Web3 based and you have a loose, wholly decentralized DAO governance structure, you're going to have a harder time scaling products, perfecting them, fixing bugs. And so we're going to have a massive competitive advantage. And we're going to use this to roll out a ever broader and more sophisticated suite of products, in part driven by an office in New York City headquarters with full-time staff, whose resumes we'll be able to see, who we can scout on LinkedIn, etc. None of this will compromise in any way the decentralization, privacy, or security of Umami DAO, which will remain exactly as it is. But the competitive advantage will be enormous. So I hope that does that address your question, JD Tiger?
Yeah, for the most part, it does. The only specific aspect of that I would be interested in learning more, and maybe it's not fully understood yet, even from your side, what this could look like. But I'm curious on what the creation of that entity would be from a specific standpoint of what kind of benefits can you provide to new types of employees? How will that be funded? And what does that look like?
Yeah, I mean, we're still kind of finishing up the finer points, but it's pretty straightforward, honestly. Right now, we are very transparent, as you know, about our OPEX, and we publish a monthly report on, our treasury, all the details of our treasury. We include a line item for OPEX, and, our operational expenses right now are in the form of USDC sent to on-chain wallets for our team. Those members of our team, and it'll probably be a substantial portion, who choose to join Umami Labs LLC, they'll just get, they'll get the same compensation, but Umami Labs LLC will probably invoice Umami, and the appropriate amount of USDC will be sent to Umami Labs, which can then convert it to fiat and pay people accordingly as employees that way. And of course, the DAO will still be the DAO, so the community will have full transparency into this, and the same level of participation that they've always had. Nothing will fundamentally change right away, but then over time, as we continue to scale ambitiously, there's been an understanding, I think, on our part, the team's part, the community's part, that we're going to need to hire more devs, obviously, to make this ambitious plan a reality. There can start to be direct hires by Umami Labs, much like any other tech company makes a direct hire, full-time staff with benefits and fiat compensation. And, that'll just be one lever, right? If we meet great talent on Web3, the DAO, Umami DAO, can hire them and just use the same method that we've always used. But Umami Labs will just give us access to another huge pool of talent. So, hopefully that offers some clarity. If you want to talk in more detail, just reach out to us, and Again, this is all very new and it's moving fast, so we'll have more details, but hopefully that gives you a sense of the general structure.
Absolutely does. Appreciate it, guys.
Sure thing. And we've got Fredegar Christensen from GMX. Thanks so much for joining us. How are you doing? Thanks for hopping on.
Can you guys hear me?
Yes.
Good evening, everybody. Apologies for the tardiness. I'm still new to Twitter and still figuring out all these different mobile and desktop functions, but we are here now, so I just appreciate the time that you guys have set aside to have us here.
Yeah, and then likewise, we're really happy to have you. And you saw we ended up winging it a little bit and just kind of dropping some general umami alpha, but I'm delighted to have you on as well. And maybe I'm trying to think about sort of the best way to do this. One thing that I will flag just really quickly for those of you who are GMX community members, I think you all know this. I mentioned it earlier, but GMX has been an incredible partner to us, and one of the ways that we want to thank GMX and its community is by whitelisting all of you guys, anyone who's a significant GMX holder, to participate in our OTC fundraise, which will be in the form of a Dutch auction, and we'll be going live sometime in June. And if you're interested, if any of the stuff we've been talking about is compelling and you just want to learn more about the fundraise and ask questions, we have a special channel called OTC Pledges in our Discord. So we already have a link to AMA questions in chat right up on our Twitter account. So you can click through to get to our Discord that way and just reach out to Mr. Grumpy Pants, who can help get you all signed up. I just dropped a ping for him so you can see his Discord handle in the AMA questions channel. So just hop on in if you're interested. And with that, so we're really, really happy to have you here, Friedergal, and wondering if you have any questions for us, and then maybe we can talk a little bit about the really cool stuff that GMX is up to.
Yeah, so I guess one of the first questions that I have off of the top of my head was what was the inspiration for, say, like a stable coin vault strategy versus something maybe a bit more exciting, say like a rebase token or like some kind of other kind of like staking strategy?
That's a great question. A rebase token would have been very exciting in current market conditions, wouldn't it? I'm being a little bit playful, but look, I think that we had a really interesting chat with the folks over at DeFi Mafia, if you know them, about this topic recently, and I'm curious what you guys think. But one thing I've always really admired about GMX is that you guys have tokenomics that are grounded in the really sustainable and growing underlying value that you're creating through your GMX trading platform, right? So the GMX token itself has a claim on ETH. GLP also has a claim on ETH, the fee revenue from the trading platform. And I think that after kind of the Ohm fork fallout, and not to mention sort of just recent extreme market volatility in this space, people are much less attracted to rebase tokenomics or anything Ponzu. So whether it's a rebase token, whether it's just a token that is sort of very emissions heavy and juices up yield by constantly minting more of its protocol token, and I think that particularly given the fact that we are looking at probably a pretty protracted bear market, that for a lot of people the question is how can I get exposure to the incredible things going on in blockchain generally, in Arbitrum specifically, without taking on a lot of underlying risk, right? And you guys with GLP have created this incredible product that does exactly that. And I think what we're doing is essentially kind of iterating on that to make it, as you pointed out, truly delta neutral for that large group of people that either they want a place to farm stable coins, they look for the highest APR options possible, and possibly they want to also take some leverage on, right, and put leverage against that. And the fact that this is going to be a vault that's tokenized with the ERC 4626 standards, so we'll issue a fully fungible vault token, opens up really cool options for adding leverage or taking advantage of other potential utility for the vault tokens. So it might not be as exciting as a rebase token, but it excites us just because there is such a demand for this sort of product right now.
No, definitely. And one thing that was like exciting for me is the fact that, I mean, if you look at the Arbitrum DeFi space, like at the time that, projects like GMX or Umami have entered, there weren't too many other products that were, friendly to new users.
Mm-hmm.
So, if you're someone who's, really big into DeFi, then like Arbitrum was, a playground. You could go there, you could, options on DopeX, you could leverage trade on GMX, you could leverage trade on, Capper, some other platform, and, do all these cool things. But in terms of finding somewhere safe to park your capital, especially if it's a new ecosystem that you're trying to familiarize yourself with, there's no product that has yet been provided for users to do that. And that's kind of what I think is, one of the great things with the stablecoin vault is that it will not only attract a lot of like liquidity or capital from other chains, but it will kind of attract the capital that is kind of like fundamental to growing an ecosystem, which are like the newcomers, the people who are kind of like looking for that one network that is both, full of a lot of products, but also very efficient and, accessible on transaction cost. And frankly, as far as I'm concerned, that's really what Arbitrum is going to become. It's going to become essentially like what Ethereum should have been, all these years ago. So to have a place where you could safely park your capital, get some reliable gains on top of that, especially in the bear market now, I think is going to be, an incredibly prime, opportunity to be in. And, the fact that you guys are working to do that, I think is, amazing and a lot of foresight. So, props to you guys for that for sure.
Yeah, I really appreciate you saying that, and I appreciate that the way that you just sort of articulated the state of the Arbitrum ecosystem is exactly how we think about it, right? Like Arbitrum is just the low gas fees and the far faster time to finality have made possible projects like GMX, right, or like Tracer or DOPEX that are just doing things that are so much more sophisticated than what could be, conceivably executed on mainnet, right? It's hard to I imagine trading, leveraged perps on mainnet with, sluggish time to finality in every TX, right?
And like price feeds from
right?
Chainlink on mainnet, like, come on.
Yeah, exactly. And so, it's attracted some of the most sophisticated DeFi projects, which is really cool. And I think it's going to, that's going to continue to be a huge catalyst for the ecosystem. But to your point, like, how does the retail investor who might not be quite up to speed on options or leveraged perps trading, how do they, maybe they see that this is a really cool thing that's going on this network, but how do they get exposure to it, right? In a more, sort of risk managed and sort of very simple way. But I think the other thing that we're kind of psyched about is it's not only about, creating these products that hopefully kind of make it easier for a lot of users to kind of migrate and get that initial exposure to the network. But the hope is that, in doing so, we help support, folks like yourself or Tracer or DOPEX, with additional liquidity, right? And so that's kind of like the beauty of, how projects growing on top of other projects can kind of support the self-fulfilling ecosystem growth, right? Like as more people, who might not have been ready for Arbitrum 3 months ago are now able to enter through, sort of simple risk hedged vaults, that's more TVL for the ecosystem, and it's getting directed to, these projects that do really incredible things with the liquidity. At least that's our hope.
No, 100%. And, someone has to do it first. And I mean, you guys are taking that chance, and I'm excited to see how it rolls out. Really excited.
Yeah. And it's, now that we've got you here, we'd love to chat about GMX, because I mean, this is, as we're building this, and this is kind of the nature of the game, right? I mean, you guys we're building this vault that is sort of optimized for some of the incredible, current, products and tokens that you guys have available. And as we're doing that, you guys are moving in some really exciting directions with, your X4 protocol controlled automated market maker, and, possibly sort of a new sort of fully fungible token, tied to your trading platform, the GD token, as it's been described in your post. And, really curious to hear about where you're going with all these things.
Yeah, definitely. So I think the best way to kind of describe like the course that we're headed on and like where we're going is to kind of do a review. So the place I think that makes the most sense to go back, because the head dev X has been in this space for a long time doing some pretty pivotal work, things like XFix or whatever. But I think what we really started to see a lot of like the heavy lifting of like X's big brain is kind of like with Gambit. And Gambit is essentially the same thing as GMX now, except for GLP at the time was USDG, so it was supposed to be dollar pegged over collateralized. And this was way back before I think really there was any attempt to kind of like come up with a stable coin in this kind of way. Not that over collateralized, but kind of like this over collateralized and fee earning stable coin that essentially is the counterparty risk to traders. The issue with that was maintaining the peg put us in a really hard position where like we had to manage the capital a lot more closely than we wanted to. And then on top of being on the Binance Smart Chain, bots were front running the price feeds a lot more easily than they can now. So it led to essentially just like a really hard peg to maintain. So it essentially got sunset, but we learned a lot of lessons from that. And the main lesson was like, we can kind of ignore the dollar peg for keeping a floating index, which is a lot more attractive to users anyways who still want to maintain some kind of long exposure to the large caps that are essentially driving the market anyway, which are Bitcoin and Ethereum. But that's just like the surface kind of like genius of like what GMX is. If you like go deeper into it, it's an exchange where the liquidity is provisioned not by paired LP tokens, where you're asking for users to have high conviction on two type of coins, essentially, right, to provide liquidity, right? Like you have to have high conviction for, say, like if you're providing a pair for like something wacky, like say like, I don't know, Pancake Swap and like Nerve token, right, before Synapse was Synapse, right? You'd have to have really high conviction in both the Cake token as a liquidity provider and the Nerve token at the time to want to both stake your capital and then park it there for a long period of time, right? And I mean, even to take Pancake Swap, not to like bash them or anything, but just to use them as an example of like what we're not doing and kind of like what we've improved from. With Pancake Swap, like as an LP provider, like you're getting just cake on top of your stake. You know what I mean? Like that's your reward. And like cake doesn't have much value past just like holding and staking and earning more, which essentially mimics the same problem that we have now with like inflationary based, fiat currencies, where it's just like, it just gets kind of like printed endlessly and it dilutes the value of like the token, right? Or like the cash fiat, like in currency in circulation, over time. So it's like, how do you encourage or incentivize capital to park for a long period of time? And how do you get rid of, say, like the issue of paired LP tokens and the permanent loss risk that comes with them? X comes up with this idea of kind of disintermediating markets by saying, all right, GMX will be kind of like this overall OTC market, will allow will allow liquidity providers to deposit capital with these whitelisted assets of any kind and receive a free floating representational kind of like index token instead. And what that index token will do is not only give you long exposure to ETH and Bitcoin, as well as 50% exposure to stables, it will also earn you platform fees and incentive fees in escrow GMX. The platform fees are paid out in Ethereum. That allows for sustainable long-term fee accrual for our users. And it's long-term because we're not pumping out some kind of token that essentially is only purpose is to be printed out, right? Like Ethereum is already an established, use value, crypto, big cap. Everyone, knows that essentially Ethereum is like the backbone of DeFi, right? So there's no question about like its long-term value proposition. Therefore, it's a lot more sustainable to pay out our liquidity providers something in like Ethereum as opposed to say something like if we were to do GMX, especially if, and that would put mad questions on things like our supply schedule or emission schedule, right? GMX is capped. That's not something that we are wanting to print out for a long period of time, because the point isn't to have a lot of GMX circulating. Right. The point is really to have this platform which can create many markets on top of it. And through creating and managing those many markets, there's a steady stream of various revenue sources that can be directed back to not just liquidity providers, but eventually the few GMX stakeholders who really believed in the project and wanted to stick through and, accumulate however much they could of the 13.25 million, or 13.5 million of GMX that's out there. All that to say is that there's this really creative and sustainable liquidity provision model that GMX runs on top of, that then allows for the platform to kind of act like this over-the-counter mediator to allow for zero impact trades and low slippage. And that's what's really driving the attraction for traders, that you can enter like a $5 million, $10 million, Ethereum, Bitcoin, long, and there's no price impact whatsoever. You cannot do that on a centralized exchange with a centralized order book, because their order book is kind of like its own isolated market, and any kind of position of size necessarily impacts, right, that centralized, apologies, I have a dog, that centralized kind of like market that they've created, whether it's Binance or FTX. And you can't really even do that with something like, Mango Markets or Gains with like a virtual, automated market maker, because as an automated market maker, which relies on the typical LP model of paired tokens, right, size trades will essentially have a large impact on one direction or the other of that ratio, right? And that's entirely eliminated by the GMX platform, because the platform itself is essentially able to draw from this very large, very deep liquidity pool and essentially just do the trades over the counter for people using the platform. And to me, that's kind of like the genius, right? So I describe it as, right, so I mean, if you look at just the landing page, it just says, decentralized perpetual exchange. But I think, we could do ourselves a lot more justice and go a step further and say it's really more like a disintermediated counterparty risk clearinghouse, the same way that like the New York Stock Exchange might just be considered a centralized counterparty clearinghouse. So that's, to me, the real long-term valuation of like GMX, is that it has in fact successfully already achieved the minimal viable product that a crypto protocol can, in terms of mimicking something as powerful and as useful as like the New York Stock Exchange. But because it's on, right, smart contracts, completely kind of like disintermediated, it's way more efficient, and a lot more value is driven, instead of like to the platform, it's driven to the users who are part of the platform, because it disintermediates all of these roles and includes everyone into it, or it gives the opportunity for everyone to be included on any end of these parts of these roles.
I'm really glad that you walked us through that, because I think that there is still not, as much of an appreciation in the broader marketplace as there should be for sort of the breadth of what you guys are offering on Arbitrum. I think that a lot of people, I'm curious if this sort of resonates with you. I think that a lot of people still think of GMX as, oh yeah, cool, like a really, sophisticated and fast and reliable sort of decentralized perpetuals trading, perpetuals exchange. And to your point, the really incredibly deep liquidity that you've created, here on Arbitrum with the liquidity pool that's represented by GLP is, has so much, potential beyond, just the trading platform, as you pointed out. And I know that, Carney and myself were noticing, as you mentioned, that there are, really large block trades in tokens like ETH and BTC, through the GMX platform that have very low slippage that probably couldn't be replicated anywhere else, right? And one thing that we were sort of hypothesizing when we were talking about what you're building at GMX is that this could create could be a huge catalyst for TVL moving over to Arbitrum, because any any whale on mainnet who wants to have liquidity for, their very large BTC or ETH holdings, for example, their best bet is to move that over to Arbitrum and trade, through GMX's pools, because they can get extremely low slippage. And I know that you've talked about sort of building on what you already offer, through sort of this X4 model that will allow protocols to kind of develop very bespoke models for LPs, sort of even more so than you see with Uniswap v3, which is already pretty customized. And I think that that'll be a really exciting way to kind of leverage the value from all of this deep liquidity you've created. So just kind of curious your thoughts on that, and if that's sort of how you guys also think about kind of the direction GMX is going, and if you do think people should think of GMX sort of much more broadly than just the current leveraged perpetuals trading platform that it's so well known for.
Definitely, that's a great question. So, kind of with all that context, I kind of just like spewed out, just a while ago. With that in mind, right, there were some questions that came up that had to be considered that did eventually push us into what is now the X4 proposal. So one of the considerations, or kind of like one of the ways that the problem emerged, is that because GLP is such a complex product, it kind of started to be a matter of balancing kind of two different interests. So there's like the interest of GLP depositors who see GLP as an index and therefore don't want certain assets in the GLP index, which means also, right, that we cannot whitelist certain assets to be traded, which, right, needs to be considered for the other side of other interests, which is the people who might just want fees. And for the people who are interested in just fees, right, they might be more concerned with like, hey, let's consider and let's do, in fact, right, list some tokens that, while maybe a little bit more volatile than ETH and Bitcoin, have a little bit more volume in general because people like to trade them. And, because people like to trade them and they have volume, we can generate fees off of that. So it became a question of like, if we do want to, these are all incredibly valid points. We do want GLP to be a very solid and resilient index asset, especially when there's not too many of those on the crypto market right now, especially like, organic ones that actually do consist of, these underlying assets in real time, right? A lot of times they're just like virtual, representations or whatever. So one of the considerations was, why don't we do like maybe like an isolated GLP or something like that, where like the isolated GLP would be, consisting of a lot more riskier assets, maybe even higher leverage, different fee structure. But the whole point being that like all the other degen assets that were not up to par for our mainnet or not mainnet, but our main flagship GLP, those would be in the isolated GLP pool. Another question was, utilization rates. Sometimes there's periods of time where ETH is, only being utilized about 25%, which means like technically there's about 75% of our ETH reserve that we could be doing something else with to be, extracting as much value out of that capital as possible. And one of the things that was considered was maybe incentivizing people to take the counter trade more readily than we already incentivize people to trade in general. So things like positive funding rates to take up, say, shorts or longs on the opposite side of trades for certain assets that could be utilized further. So with all these considerations in mind, we were like, this is really more of a perfect opportunity. And I'm really kind of just riffing. I don't know entirely what X's thought process. He's a genius, so like whatever really drove him to X4 or whatever, that's anyone's guess. But it's not to say that there wasn't this opportunity to consider some wildly more dynamic approaches to making markets and also providing not just liquidity, but encouraging volume such that all the assets that you do have, and this is just in general speaking, right? All the assets that you do have in a reserve are being used as efficiently as possible and therefore generating as much revenue, which in our model can be driven, give me back 30% to GMX stakers, 70% to GLP stakers as it currently stands. So that's when we came up with X4 and GD, which again, still a mystery to any one of us what X means by GD. We don't know if that means like GMX dollar or something like that, but we have GD. So X4 would work a little bit more like some traditional markets where like, Uniswap or SushiSwap, if you want to provide LP, right, you might like pair up some tokens. But what's more interesting about X4 is not really the LP model, but more how it gives protocols way more customization on how they launch that liquidity and manage it over a period of time. So that means that you can do some really neat things, such as have a token where in the LP pool, right, maybe there's a slightly higher fee for selling the token than buying it. And maybe that, fee is circulated back to token holders or something like that, or to a DAO or whatever. Or maybe you want to have some kind of like interesting kind of like burn and tax emission kind of like function on the cell. Maybe you want to have like a neat promotional buy opportunity where like, or not opportunity, but like campaigns, like you want to kind of like encourage people to buy early on. So like maybe you have like first, 5,000 token swaps, for this, kind of token, you get like, say, maybe a positive funding rate or something like that. The whole point is that X4, in a way that Uniswap or SushiSwap don't do now, gives protocols who want to, deploy liquidity and manage it really granular controls. So that way they can really pull the most out of like their tokenomics without having to like, say, rely on mechanics that are, things that happen after market, which can kind of really present like a gaming opportunities that weren't previously anticipated, and which can kind of disrupt kind of like the intended flow of the ecosystem that like the developers had for a particular project. So X4 is kind of like a solution to that. And then GD is more like a solution for our underutilized assets. GD is essentially kind of like a more direct counterparty pool where it's like if, say there's 23% utilization on Ethereum and almost all of it are longs, maybe, with GD, there's a positive funding rate as opposed to like you paying to like enter a position or whatnot and manage it to essentially take the short right for Ethereum. And maybe that positive funding rate goes for as long as it takes to get essentially $23 million of open interest in shorts on Ethereum. Then at that point, we have a further utilization of our Ethereum, but also a balance on the open interest volume for longs and shorts, which ensures that not only is the capital being used efficiently, but there's the maximized revenue return for our holders. So that's kind of the power of GD, and that the basic underlying ideas of that, right, are just like PvP trading. So that's what I meant earlier when I said it's a little bit more direct than GLP, because it's kind of like by entering a position or whatnot, right, like you're immediately burning or minting the GD, and then of course there are like liquidity providers still if they want, right, to provide capital deposits for GD the same way that you would with GLP. But the point is that it's just more direct, and essentially the funding model would be a little bit more dynamic to encourage full utilization of our capital that we have under our control. So that's kind of what the thinking is for X4 and GD. And I believe X4 is probably what we'll be prioritizing, and GD will be launching alongside GLP, but probably on a different network for testing purposes, because it does like a lot of this is so kind of forward thinking that when it comes to at least the PvP part, like X4 I can understand pretty squarely and explain it, but the GD and the PvP automated market making is definitely a lot more cutting edge, and I'm excited to learn more about it. I'm excited to see X say more about it, but really all this shows to me is that like he's clearly 2 or even 3 steps ahead of a lot of where the direction of DeFi is heading. So very, very lucky to be working with them.
Definitely, and it's very exciting. And I guess just one thing for me and probably for listeners as well, just to clarify, is the long-term vision that GD will replace GLP, or will exist alongside it to address kind of these open interest imbalances that rise up, sometimes on the trading platform? It sounds like it has the potential, since people can play the role of being liquidity providers and receive GD, to replace GLP. But I just want to make sure I understand that properly.
No, that's a good question. So from what it seems like now, and also just I think this kind of implied in the X4 Medium post that I believe is pinned to the GMX Twitter, is that they're going to coexist together. Mostly because I believe the main function of GD is essentially to highly incentivize taking up the counter trade, or essentially the opposite direction of like wherever the momentum is for like a particular asset. Whereas like GLP is both, long, short, and swaps. I'm not entirely sure if swaps would be entirely funneled through GD. I don't see why it wouldn't be, but that's kind of just going into like a lot of details that I'm right now just kind of like speculating. But as far as we know, right now they would it is planned for them to be deployed alongside each other, and that's why I mentioned GD would be on a separate chain as well.
Great, and that's really helpful. I know that a lot of this is very long term, and maybe we're actually over our hour mark, but before we wrap it up, we've heard some really interesting things from GMX today, and obviously Umami shared quite a bit earlier as well. So do we have any more audience questions for either of us? Happy to answer.
Definitely a lot of alpha to process.
Totally.
Hey guys.
Yeah, we might need. Oh, hey there. How are you?
All good. Thank you so much for this, podcast, the Twitter Space talk. It was super informative. So I just basically want to ask a question about the capital efficiency and also the deep liquidity, that part. If possible, would you mind kind of explaining again in terms of what's the mechanism that makes it way more efficient than other exchanges, I guess. Thank you.
Sure. Definitely kind of like ran through that the first time, and there are some nuances I could break down. So I guess the first thing I'll say is, in any kind of DeFi space, right, the idea is you're provisioning liquidity from all kind of different sources, disparate actors, and people who are essentially, strangers, anonymous, pseudonymous, all different kinds of people. And the main question is, across this very wide group of people, which you might not have a lot of data on, right? How do you incentivize their capital to your platform? And the conventional thinking has been, come up with a platform token that may or may not have a particular function, but has some value just because, there's some liquidity behind it, some hype. People are currently, circulating it in anticipation of this hype. And so, they say, hey, we'll come up with this platform token. It won't even have a supply. Maybe it has a supply. We'll talk about that later. But what we'll do is we'll just kind of like reward people this platform token at this high APR rate, and it'll kind of just go down as capital pools in. And once we have enough capital, the APR will have been, gone down at that point. And maybe the project will have done something with that capital, right? That's the typical, kind of thinking for most, projects, especially where they're trying to make markets with, a large amount of liquidity. The issue with that is that it's not sustainable for two reasons. One, the APR goes down as capital or TVL increases. But the other thing that can possibly and then does tend to happen is that the people accruing the rewards, right, this platform token at a high rate, who don't really have an incentive to hold it, start to sell it. And what you really start to see is a complete tumble and collapse, right? This is very normal for a lot of Binance Smart Chain projects. It was kind of a thing early on with Phantom and even, some of the newer chains like Moonbeam or Moonriver, right? Is with the APR collapsing just because of TVL growing, and then people also dumping the token, you kind of have like this catastrophic sell-off. And that's just to say, like, the conventional way of thinking about liquidity provision is to provide unsustainable rewards. So what GMX did to kind of rectify that issue, and that issue is really, right, it's just temporary liquidity, right? We want to make sure that our liquidity is parked there for a long time, is we need to come up with a sustainable reward rate and kind of like structure that encourages capital not only to deposit, but to remain deposited on our platform. And so that main model, to me, that main pull and attraction was the fact that as a platform, X and the platform decided that 70% of all the fees collected by the platform, 70% of the platform's revenue is going to go back to liquidity providers and as ETH. That, I mean, I honestly cannot think of any other project that so openly and freely kind of revenue shares with such a critical component of their structure, right? Which are the liquidity providers. Like, every project is built on like the capital that is underlying it, right? And GMX decided to take in my opinion, the very noble route of saying, hey, like, we're going to take more than half of the revenue we generate as a platform, and we're going to share it with our liquidity providers. And I think our liquidity providers understand what that means to be able to receive yield in something that's a valuable asset like Ethereum, as opposed to like some platform token that may or may not be made obsolete by the previous factors that we mentioned before, TVL increasing and people dumping the token, which accelerates just a general decrease both in the incentives and the price of the token. It also means that our providers, not in addition to just getting ETH, they're also getting a long exposure to Ethereum and Bitcoin, and a 50% stable hedge against that long exposure. So they are getting a novel crypto index that exposes them to all the assets they want to be exposed to anyways, on top of netting them a sustainable yield over time that is paid out in ETH rewards. I cannot think of another project that does anything really as mutualistic and as generous and as sustainable as that right now. And I think because of that sustainability, we've been able to instill a kind of like confidence and a kind of standard for our capital depositors that has allowed us to, for instance, maintain over $100 million in liquidity alone on just Arbitrum network, even during this bear market. And that is something that I hope that we continue to build on. And I think that's something that we lead by example on.
That's great success over there on Arbitrum. Congratulations. And I just want to add another question. So in terms of 70% of the fee share, what kind of impact do you think that's going to have in terms of longevity over the treasury management?
That's a great question. It has been discussed in our community, right? It wasn't originally actually even 70% for those who were early investors. The original kind of revenue share was supposed to be 30% for GMX, which it's always been. So that's why, GMX, I think, has been doing really great. Before, it was just 50% to GLP, and then 20% was supposed to go to a floor price fund, which is supposed to support kind of like a base peg for GMX. What happened with the floor price fund is that GMX essentially excelled in its price appreciation way faster than the floor price fund could keep up with. So what we figured was that it would be more important really to continue incentivizing the provision of liquidity than it would be to kind of attempt to provide a backing price for GMX. So what has happened now is we have what we currently have, which is, GMX running with the way it has, with cost, over $40 million in fees for, all time running, regularly doing over $100 million in volume daily, 24 hours. But there is the question of are we maybe paying too much for our capital when we could be maybe doing something else a little bit more with that? And that kind of goes back to the first part of your question, Patricia, about like, capital efficiency. Right. With such liquidity, right, we've been able to provide traders, long and short, entry options and swaps. And then we've been able to kind of increase our swaps with our integrations, but that doesn't mean that there aren't places where we can still possibly do more with the capital we have around. And so one of the things that people have kind of been wondering is, what if, for instance, we took a portion of our Ethereum and maybe just like staked it in Lido or something like that? Or what if we took a portion of our stables and put them in like a try crypto on Curve or something like that to earn a yield on top of that? Right? These are all questions that we are considering right now and have been asked by the community, and we've asked ourselves as part of the team. And so it's a question that we have to definitely navigate carefully as well, because it is, again, that revenue split is, a part of the core reason why our capital, depositors are where they are now and still, happily parked in GLP. So it's a question of one, maybe, right, especially if ETH rebounds, maybe we can get away with, cutting fees off by like 10, 5%, something like that. But it's something that it needs to be considered in the wider context. And it's also something that we always put up to a vote to the community. All that to say is, like, there's a lot of opinions. We've been discussing this pretty much since day one. And what we do know for sure is that right now it works out. But there, like I said, it's a very open discussion as to should we change the revenue model and to what purposes or to what end will we change it. So I wish I could give you a little bit more on like, do we see this as being like a long, like it works, it can continue working like this, but there is also an appetite for some kind of change and for some kind of change in the direction of being a bit more efficient, being a bit more hungry for some more value to be returned to stakers and holders. So, these are just things that we're going to have to juggle kind of going into the future. Hopefully that kind of answered your question. If it didn't answer your question, let me know and I'll be happy to try again.
That's a super good answer. Thank you.
Thanks so much, and appreciate the really detailed answer. So, Jonathan, you've just hopped on. Do you have a question for us?
I did have a question. Thank you. I was curious how, if you guys put your stables in the TriCrypto pool, you maintain that 50% downside hedge, since that pool is obviously 66% Bitcoin and Ether.
Well, that is the premise or the point of our vault strategy. So it's a good question. It's an important one, right? So, with traditional GLP, I mean, it's a very desirable asset. I mean, personally, I hold it in part because it's not delta neutral, right? GLP is 50% stables, as you pointed out, and then, the remainder is primarily Bitcoin and Ethereum. So it has, a modest level of market exposure. And, so it will move during, volatile periods such as the past few weeks. Not as much as holding, Bitcoin and ETH directly, but still significantly. And so, for a lot of people, that's actually a desirable, profile for an index-like asset such as GLP to have, because, there's not massive downside risk, but it still captures some of the upside of the, growth of really just the outperformance of Bitcoin and Ethereum. But, our thought in creating the vault strategy that we have built is that, there's a lot, GLP is an unbelievably valuable asset, largely not only because of its index-like qualities, but because of the claim it has on fees from the GMX platform. As you know, it generates about 70%, or it collects about 70% of the fees, as well as the value from liquidations, right? That the GMX, the protocol, essentially keeps, right, when traders are liquidated on the platform, and that accumulates to holders of GLP. And how appealing would it be to have a way of getting that exposure to the growth of the GMX platform and the increasing number of users who are trading on it, and the growth in its fee revenue potential, without having to take any market risk, right? And so what we've done with our vault is we have offset the market beta, essentially, the market delta of the GLP asset by placing short positions on Bitcoin and on Ethereum using Tracer DAO's leveraged perpetual pool tokens. And what's really special, two things are really special about Tracer's products. The first is that they never liquidate. They have a completely different model. It's quite innovative, and there's zero liquidation risk. And so they can be held long term and provide an ongoing hedge, to whatever degree you want. And they're also incentivized themselves with Tracer emissions, so they are yield generated. So what we've done is we've paired the Tracer perpetual pool tokens with the GLP asset, right, to achieve full delta neutrality. But the vault still has a claim, both on Tracer, because Tracer's tokens will soon start collecting fees from their platform, and it has a claim, very large claim, on the fees generated by the GMX platform, and that forms the basis of the yield for the vault. And the one thing I'll add that we think at least is quite exciting about the vault is that the vault is not capped in terms. We say 30% plus APR, but that doesn't mean that it stops at 30%, or some number above 30%. Meaning that if as we've seen, GMX continues to attract new users, generates more fee revenue, more TVL migrates onto Arbitrum, and therefore the ETH APR for GLP continues to grow. So too should the APR in the vault, and the only difference is that the vault has stripped out any market exposure. So it's just this pure delta neutral play on the growth of GMX and Arbitrum. Hopefully that answers your question.
Yeah, thank you very much. Appreciate it.
Great. And we're well over time, so I think it's a good time to call it. But I just want to thank everyone. Thanks so much for joining us, Friedel. And we'll be talking soon. Very excited about X4, and as well as all the other cool things you guys have in the pipeline. And thanks everyone for listening in. We're going to have some really exciting announcements soon, so stay tuned. Thanks, guys.
Awesome. Well, thank you for having me. Good evening, everybody.